The Debt Management Office plans to raise 1.35 trillion naira from the bond market in the second quarter of this year from the newly issued 2029 bond, the 2021 and the February 2034 bonds. Meanwhile, traders at Access Bank say that they expect bullish momentum in the market, in the treasury bills market, to continue today on sustained liquidity. Bosun Obembe is a team lead at Access Bank. He joins me now for more on the markets there. Thank you so much for your time today, Bosun, and interesting times in the market there. Let me first get your thoughts on the DMO's borrowing plans.
Good afternoon. Thank you for having me. So on the DMO, the bond calendar, which is what will shape the fixed income, the bond space in this quarter. So we saw the DMO coming to raise about 450 billion monthly, which is different from the usual amount that they used to raise before. On each maturity used to be 90 billion, but we saw an increase of about 60 billion. So 450 billion each month. What we've seen in recent time is the DMO and the CBN, they've been working together to actually attract flows from foreign portfolio investors and to actually discourage people from speculating on naira, on USD. So we've seen rates going up. So what we've seen in the bond calendar is we've seen a cautious approach, because what we've seen some of the traders trying to go short on some of the instruments that will be on the auction. But given the level of system liquidity and today we've seen this CBN coming to the market to come and mop up this excess liquidity via DMO auction. So I think the DMO and the CBN, they are working together to actually ensure that the market is very liquid and is very attractive for investors.
Yeah, but for you, what has been the key highlight going so far this week, and what are you anticipating in the market this week?
So for this week, the key thing I would say is to say that the CBN strategy at ensuring that naira is strengthening is working. If you look at what we've seen so far, we've seen naira moving from 1.6 before, is currently trading around 1.270. And then there are a lot of offers from the foreign portfolio investor, given the DMO announcement today. So we've seen a lot of dollar offer from foreign investors, but we don't have much demand from customers. So when you have too much supply and you have less demand, so what that shows is that the rates will go down. So what it shows is that the naira will continue to strengthen against the dollar, and I see it going below the current level. Let's say close at 12.92. Today I'm seeing something around maybe 12.60 or 70. So that has been the key thing for me, because when CBN noticed that the market liquidity opened over 600 billion today, so they just announced the DMO auction where they want to mop about 500 billion from the system today. So which is, we will see a lot of oversubscription. At least I'm expecting something not less than 1 trillion subscription at today's DMO auction.
Yeah, but yes, you're giving me somewhat of a short-term outlook for the naira, but I'd like to get your take for the rest of the second quarter. And yes, we're seeing this improved dollar supplies coming, but what's your outlook for the naira and for the rest of Q2?
So for the rest of Q2, I expect that this momentum will be sustained by the DMO working with CBN. I expect that at least the naira will still be around maybe, in my opinion, I think we should see it maybe 1,000 to 1,001, because the speculation is no longer there. The tightening is working, and we'll start to see the impact on on inflation numbers by probably May or June. So I think the naira will continue to strengthen. Maybe before the end of the year, it might get to the level CBN is looking at. But I think CBN is comfortable at between 1,000 to 1,001. I think we can get there very, very, very quickly.
And your call for liquidity, are we expecting some major inflows coming in for the rest of the Q2? And how do you see the CBN strategy and interventions going for so far in mopping up?
So I think on the excess liquidity, as CBN, anytime CBN notices an excess liquidity system, they come up with different strategies. So the key one is the CRR, which they've used effectively to actually mop excess liquidity from the system, because that one is at zero cost for the CBN. And another one is the DMO auction, which and the NTB, so which effectively they've used to actually mop excess liquidity. And even the increase in the MPR rate and the increase in the NTB and the OMO rate is a way of mopping the excess liquidity, because what we have seen so far is, when a foreign portfolio is coming to bring in dollars, then that means naira has to go out. So I think CBN will continue to mop excess liquidity, because the core objective of CBN is to actually rein in the inflation, which is above 31 level. So I think they will continue to mop excess liquidity by the time they see it. I think what will drive the liquidity will be probably the FAC inflow and coupon payment, and maybe some majority. But as those majorities are coming, you see CBN coming, and DMO coming to mop up this excess liquidity. So I see tightening, though not aggressive by the end of Q2.
All right, definitely a lot to consider there. Thank you so much. Bosun Obembe is the team lead at Access Bank. We're talking about the fixed income and FX markets here in Nigeria. But now we're going to take a quick break, and when we return, Power Lunch West Africa will be back in just a moment.